Hello and welcome to today's video. It has been a rotten year so far for investors. April in particular was a horrible month. It can be very painful when you open up your monthly statement and see the dollars down significantly. It's even tougher when you're retired and your years to make up losses are less than they were 10 or 20 years ago. How long does it take to break even in a bear market? It's a great question, so let's dive right into it. Here's a look at every bear market from the S&P 500 going back to 1950 that shows the drawdown, peak to trough, number of days they lasted, and how long it took for the S&P to reclaim previous levels. Over 15 bear markets, the average downturn is a loss of 30%, lasting just under a year to reach the bottom and taking a little more than 1.5 years to break even. The last 3 bear markets have all been relatively short-lived. 8 out of the 15 bear markets broke even in under a year. The worst case scenario is the 1973 to 74, and 2000 to 2002, and 2007 to 2009 crashes, which all took more than 4 years to recover. These are great examples, but most investors are not 100% invested in stocks. What does it look like for a more balanced investor? We're going to use 50% stocks and 50% bonds for this example. And I do have to thank Ben Carlson, CFA, who put together a simple portfolio using the S&P 500 and 5-year US Treasuries going back to 1926, rebalanced annually. Here are the rolling 5-year annual returns. Annual returns over 5 years were negative just 4.4% of the time, going back to 1926. The last time this happened was ever so briefly at the end of February 2009, when the trailing 5-year annual return was negative 0.02%. Before that, the worst periods were in the 1930s, as stocks fell 5.5% annually during the Great Depression and its aftermath. Annual returns over 10 years have never gone negative on a 50-50 portfolio. The key message here: diversification doesn't always work perfectly, but the track record suggests it's pretty hard to beat in terms of both portfolio growth and risk management. Bear markets are hard to deal with because we human beings can panic under duress. It is important to remember though, unless you have recently received some bad news and your life expectancy has been significantly shortened, or you need to access the majority of your capital in the short term, panicking and making rash decisions with your investment portfolio is highly unlikely to be in your best interests. Successfully navigating a bear market requires patience, sticking to your strategy, and a good handle on your emotions. I hope you found this video helpful. If you have any questions, please feel free to leave in the comment section below.